Welcome, everyone. Thank you for giving us a little bit of your time this morning. It's a pleasure to share this webinar with you on the H1 activation from various brands. We will have the pleasure today to have Rita and Agatha share the main insights of what we've seen throughout the first semester with Brandwatch. Maybe Rita, you can share the screen so we can start together.
Can everyone see my screen?
Yes, it's okay. Yeah, now it's working well on my side. So if you could move to the next slide, that would be great. The idea today is to share with you the main insights that we've seen and extracted from LY Watch. LY Watch is a tool that we've been developing within Luxury Insight for the past 8 years. We monitor a little over 100 brands, and we've seen through H1 more than 10,000 activations. If you go to the next slide. So the idea today is to share with you the insights we extracted from 20 leading brands in 4 categories: fashion leather goods, perfume cosmetics, watch and jewelry, and sports and lifestyle. And we've added on top of this activation summary or main insights, some key insights we extracted from Euritech platform, which is now joining forces with us and which will be shared later by Agatha as well. If we just move on. So we mainly organize the activation we collect daily in 3 categories: product activations, marketing and communication activations, and retail activations. Here are a couple of subcategories that we monitor. So we monitor all new product launch, new collection launch, communication activations such as fashion shows, digital campaigns, new ambassador, and for retail, it could be new store reopening, or new e-retail activation. So these are the kind of activation that we monitor. And if we move to the next slide, Rita, and today we will together look at the key activities and insights we can see and we've seen through these categories. But for that, I will leave the expert take on. So Rita, take the lead. And if you have any questions, feel free to ask them in the Zoom conversation. We'll answer them later on. Rita, the floor is yours. Thank you.
Perfect. Thank you so much, Jonathan, for that great introduction. And hello, everyone. So I'm Rita, manager of the Insights department at Luxury Insight. And it's a pleasure to be with all of you today for the session on the global luxury brand analysis for this first half of 2025. We'll take a journey across key market dynamics, sector trends, and strategic brand moves that are reshaping the luxury landscape. Our focus is on how brands are adapting their activations, their retail approaches, and their cultural engagement strategies in a period marked by transition and renewal. So as we enter 2025, the luxury industry faced its first global slowdown in years. The personal luxury goods market actually contracted 1% in 2024, down to 364 billion euros, under pressure from a softer macroeconomic backdrop, the new US tariff policy, and also weaker consumer spending. In our first half measurement window, brand activations decreased 2% year on year, and not from a withdrawal, but more like a strategic pivot toward more localized and experiential initiatives. We also observed a clear sectoral rebalancing: perfume and cosmetics, which now account for 44% of all brand activity, that is ahead of fashion and leather goods, and watches and jewelry. Regionally, the momentum was really strongest in APAC, up 96%, and the Middle East and Africa, up 91%, driven by booming market in Saudi Arabia, the UAE, and Qatar. Europe and North America also advanced, while China remained the largest market by volume, climbing 47%. And finally, the biggest lever this semester was retail activations, which actually surged by 48%. And that was led by pop-ups, cards, and flexible formats, as maisons actually doubled down on experience-driven engagement. That's the signal. So fewer, but more meaningful activations, anchored locally, designed for emotion, and built for long-term loyalty.
If I can interrupt you just for a second, one of the things that we've seen here is still the importance of China, which we will discuss later on. So China is still struggling somehow to become potentially the main engine of the luxury market, yet the brands are still quite active, and it will be interesting to see the brands that are continuing to push on that market and the difference between the main brands globally and the main brands activating in China. So you will see that later on. Again, Rita, sorry, I'll leave it up to you.
No worries. Thank you so much, Jonathan. So now moving to our first slide that really shows the overall activation overview and the landscape for this first half. So we can see that the industry has entered a phase of quiet recalibration rather than decline. Globally, the activation slipped only slightly, so about 2% year on year, as we saw. But behind this mix, we have a number that tells us a more nuanced story. So on the left, when we started fashion and leather goods, which actually eased back as brands reduced the large-scale product drops and global communication pushes. For perfume and cosmetics in the middle, we see that it clearly became the growth engine of the semester, now accounting for around 44% of the brand activity. That is a sharp rise compared to last year. And on the right, we have watches and jewelry, which lost a few points of share, but mainly because communication activity normalized after last year's heavy storytelling cycle. And what we see is what truly stands out is the retail components. So all over, we can see that across all categories, the retail activations really increased significantly, up about 48%. And again, driven by all of the immersive and engaging concepts that brands have been launching. This marks a very deeper strategic shift. So instead of chasing scale, they're re-anchoring growth in physical experience that feel more local, more human, and more emotionally resonant. So here the message isn't about just decline, it's more about selectivity. Fewer activations overall, yes, but also smarter and more targeted and more local, created to design a more long impact. Now going a bit deeper, so to break it down more geographically, because the story becomes much more interesting when we look at where actually this growth is actually happening. So if you follow the chart here, you'll see that in every region, they posted an increase in localized activation, but the scale of that growth actually varies dramatically. At the top, we see Asia Pacific standing out with an impressive 96%, followed closely by the Middle East at plus 91%. We see that these two regions are really remaining the power engines of luxury, driven by expanding retail footprints and a clear focus on cultural resonance. Within this surge to the right, we can see that perfume and cosmetics really stood out, up to 139% across the regions within the brand scope that we monitored for this report purposely. In North America, we saw a healthy progress, up about 57%, fueled by more lifestyle collaboration and experiential retail along the coasts. Meanwhile, in Europe and Latin America, they advanced within the 40% range, reflecting a more cautious but steady recovery in brand momentum. And in China, as Jonathan already mentioned, despite the more challenging macro environment, they still lead in absolute volume, up 47% in activations this semester, confirming a very central role in luxury's long-term growth story. So now that we've actually set the context with the macro and regional dynamics, let's dive into the key global trends shaping luxury this year and driving those numbers. So to start, one of the most defining trends this year is actually the rise of experiential retail. According to Bain, spending on experiences is up 5%, while traditional goods sale fell slightly. So brands are reinventing their physical spaces as immersive cultural ecosystems. We see LVMH leading the shift. Take, for instance, the Louis in Shanghai that is visible on the pictures here on the right. It's a steamship-inspired store that actually blends a cafe, exhibitions, artisan workshops, and private saloons. It's not just a store, it's a multi-sensory journey that builds long-term loyalty. And this approach serves really three purposes. It anchors brands locally, it creates global media buzz, and it deepens relationship with top clients. In fact, by 2027, VIC clients are expected to drive up 80% of luxury growth, and experiential flagships are how brands are actually winning their hearts. Another trend we actually highlighted in our report is what we call the big impact small investment. So here we see luxury brands embracing more flexible and mobile formats that actually create high visibility with a lower capital spend. We've seen gelato pop-ups, traveling trucks, and summer beach carts turning into mini brand universes. For instance, also here Louis Vuitton's Gelateria in Forte Dei Miami, you see it here, it transformed a simple ice cream shop into a social media phenomenon. Nearly half of all retail activation this semester were actually pop-ups, and that is a huge thing for experiential retail. They extend luxury into everyday lifestyle moments. And that one makes one of its most effective tools of 2025, extending luxury into everyday moments. Now, moving on to our third trend that is around China, where luxury spending has softened and luxury shame is real among young professionals. We see brands turning into exhibitions as a form of more inclusive engagement. Exhibitions are combining heritage storytelling with art and craft, and they allow brands to connect emotionally without pushing transactions. So, over the first 2 months of 2025, the number of exhibitions in China matched the entire volume of 2024, and that is a 59% increase. Here we see examples from Gucci, Bulgari, Penaligon, and Loro Piana, all using art and craft as cultural bridges. The initiatives are low cost but high impact, and they build long term brand equity with VIC clients and aspirational clients. Now, moving on to another notable market dynamic, let's talk pricing, always a sensitive topic. So, luxury brands continued to raise prices in the first half of 2025, but at a much more measured pace than in previous years. Across bags and leather goods, prices rose around 1.2% on average globally, with around a quarter of catalogs affected. And those specific SKUs saw a plus 4.1%, while iconic pieces rose a more modest 0.9%. This reflects a clear normalization trend, with brands that are sticking to single-digit, disciplined adjustments, far from the sharp post-COVID surges. Regionally, Japan leads with a 1.9% increase, followed by the US at 1.5%. They're both influenced by currency shifts and anticipated tariffs. Europe and China remain close to the global average between 1.1% and 1.3%. Overall, pricing today is becoming far more strategic and data-driven. Brands are using tools like our LY Price platform to monitor competitors, calibrate by region, and protect competitiveness in a more mature market environment. Now let's zoom into our very first category, fashion and leather goods. So here we have a general overview. We see that fashion leather goods activations declined by 19% globally and 32% in China. This drop mainly reflects fewer product launches and communication campaigns as brands moderated their event and campaign activity. However, retail gained share, up 4 points globally and 5 points in China, showing a clear shift toward localized experiential formats that deepen client engagement. So even though total volume is down, the strategic quality of activations is improving. Brands are moving from quantity to impact, as we've already discussed, prioritizing stronger in-store experiences and market-specific initiatives. Now, this slide highlights the type of activations most frequently recorded during the first half of 25 within our scope of brands. So at the global level, communication continues to dominate, accounting for about half of all activations, followed by product and retail initiatives. We're seeing a decline in major campaigns and fashion shows, while events and exhibitions are gaining traction, signaling a shift toward more experiential and immersive formats. On the product side, activity remains strong, led by new product launches, which make up the largest share through slightly down year on year. Meanwhile, new collections are on the rise, and limited editions and collaborations continue to highlight exclusivity and storytelling. In retail, momentum is actually building. New store openings are increasing, while pop-up stores are slightly down. We're also seeing more cafes, hotel partnerships, and new market entries, reflecting a broader lifestyle and expansion mindset. In China, however, the picture is similar in certain aspects, such as communication dominating, driven mainly by events and product campaigns, while retail continues to expand through the new store openings mainly. Overall, brands are refining their collections and their activations, shifting from scale to selectivity, and focusing on quality, local resonance, and experiential depth. On this slide, similarly, we're going to see the top 5 brands with the most activations. Globally, both in product and communication, we see Louis Vuitton and Christian Dior Couture that remain in the lead, continuing to set the pace through consistent storytelling, strong campaign presence, and product innovation. Gucci and Prada also feature prominently, while on the retail side, Coach, Prada, and Loewe stand out, expanding their physical footprint with new stores and experiential concepts. In China, the picture shifts slightly. We have Coach that remains one of the most active brands across product and retail, reflecting a very strong local execution and consumer connection. In communication, Saint Laurent and Marc Jacobs stand out, while Prada continues to perform strongly across multiple pillars, showing its growing consistency and cultural appeal. Overall, this slide illustrates a clear balance heritage leaders that maintain their global dominance, while agile, design-driven brands are gaining ground locally, connecting more closely with culture, community, and new consumer codes.
If I could just 1 second say something here, if you go back 1 second, I know everyone wants to talk about the designers and you will in a second, but what I find interesting here, and to answer a couple of questions that have been raised throughout the chat. So our methodology is to collect all the products launched both offline and online, likewise for communication and retail. We can discuss the methodology later on. And of course, you've seen a lot of offline activations as well. What's interesting here is also to see the difference in split between product communication and retail activations worldwide and in China, where we've seen a little less limited editions and new product activities this year, but also to see the difference in brands focus on China or defocusing a little bit on China, relatively, of course, because as you see, the listing of brands below in activities are not exactly the same as we would see on the top ones. So some brands are continuing to push or try to push more and more in China right now, while other brands are mainly focusing on the top growth engines. This is also something that we've seen throughout these 1,200 activations. Thank you, Rita.
Thank you, Jonathan. So now moving on to an interesting and notable dynamic that's still going on strongly, and we've been observing consistently, is that of the ongoing reshuffle of artistic directors and what we call the musical chairs. So from Jonathan Anderson's dual creative leadership at Dior, overseeing both women and men's lines, to the Proenza Schuller design duo now taking over Loewe, succeeding him. And we've watched brands strategically recalibrate their creative direction. And again, this trend is still gaining momentum. Most recently, we have Silvia Venturini that announced her departure from Fendi, underscoring that the industry's reshuffle of creative talent is very much ongoing. These moves actually show how brands are using creative appointments to reset cultural direction and signal renewal. For maisons, such shifts are far more than aesthetic. They're strategic decisions, sending clear messages to investors, consumers, and especially Gen Z, who now expect creativity to embody cultural meaning and social relevance. In short, the new luxury playbook is no longer defined by exclusivity alone. It's defined by relevance and creative leadership that has become the key catalyst driving that transformation. Another key trend this year is luxury's expansion into everyday living. We see more brands extending their universe beyond apparel and accessories, going into homeware, interiors, and design collaborations, shaping what we now call the luxury lifestyle concept. The home market itself is growing steadily, up about 1.3% this year, and brands are seizing that momentum. At Milan Design Week, which recorded a 20% increase in events and a 24% rise in earned media value, we saw strong representation from Louis Vuitton, De Rose, Saint Laurent, and Ralph Lauren, all reinforcing the link between fashion, design, and craftsmanship. For Ralph Lauren, for instance, the debut of the Canyon Road collection in Milan embodied that intersection beautifully, combining heritage, artistry, and modern living, inspired by the American West and realized through fine Italian craftsmanship. Ultimately, this evolution allows Maisons to position themselves as lifestyle curators, not just fashion makers, deepening emotional connection with clients who increasingly seek beauty, meaning, and authenticity in their living environments. Now let's move into our second major segment, that is the growth engine of H1, and that's perfume and cosmetics. Here, the story is quite different from fashion and leather goods. So we see in perfume and cosmetics activation expanding sharply, up 32% globally and 25% in China. And this growth was almost entirely driven by retail. As you can see on the chart, we have 16 points globally and 20 points in China. By contrast, product and communication activations declined, showing how beauty brands are doubling down on experiential and in-person touchpoints. From pop-up boutiques to beauty cafes and immersive skincare studios, the focus has shifted toward creating sensory, community-driven experiences that build lasting emotional connection. Now, similarly to the first sector that we covered earlier, we're going to look closer at the categories that are mostly impacting the sector. We see that globally, activity is still concentrated around limited editions and new product launches, which together account for the vast majority of product activations. In communication, we have events that are now making up half of all initiatives, confirming the shift toward live experiential engagements rather than traditional campaigns. But retail is where much of the innovation is actually happening, with 63% of activations coming from pop-ups and more than 8% involving cafe, hotels, or hybrid spaces, reinforcing how beauty and lifestyle are actually very increasingly intertwined. In China, limited editions dominate, representing nearly 80% of all product activations. That is a clear sign that exclusivity and collectability remain the key drivers of consumer desire. So here again, this slide shows the brands that are most active in perfume and cosmetics during this first half. Globally, the major heritage players, such as Dior, Lancôme, Guerlain, Estée Lauder, and L'Oréal, continue to lead the category, supported by a strong pipeline of product launches and experiential retail activations. We also see a slight slowdown in communication campaigns, indicating a more selective, storytelling-driven approach rather than a high-frequency pushes. In China, activity remains robust, led by Estée Lauder, Lancôme, MAC, and L'Oréal, with a surge in skincare-led activations, live streaming collaborations, and boutique openings. This confirms that beauty brands are balancing physical and digital engagement, using both channels to sustain visibility and consumer connection. So overall, what stands out is the balance between innovation and selectivity, fewer mass campaigns, but richer experience-driven activation that are shaping the sector's rhythm. Now let's shift to the Gulf, that is one of luxury and beauty's most dynamic frontiers. So since 2024, beauty brands have significantly accelerated their presence across Saudi Arabia, the UAE, Qatar, and Bahrain. The GCC personal luxury market grew 6% to 11 billion euros in 2024, and beauty now represents 19% of that total, making it the fastest growing category in the region. Brands are increasingly tapping into local cultural rhythms, from Ramadan to Eid to national holidays, to create limited editions and experiential campaigns that blend luxury with cultural relevance. A great example we see here is Charlotte Tilbury's Ramadan Celestial Collection. The campaign featured regional ambassadors, in-store pop-ups, and private masterclasses, combining craftsmanship with authentic cultural storytelling. This culturally attuned strategy is helping global brands build deeper resonance with Gulf consumers, aligning with local values while also amplifying global desirability. And as seen here, much of this work is actually delivered by my department, Insights, where we actually develop for several clients KCP-oriented projects, let it be globally, regionally, very specifically. So that's also in case you have very precise questions for later. And now let's turn to watches and jewelry, the sector that is showing both resilience and reinvention. We can see here that globally, the activations declined 18% in the first half of the year, and that is mainly due to weaker communication activity, which dropped 8 points. That said, both product and retail gained ground, reflecting a gradual rebalancing toward more tangible, experience-led initiatives. China, however, moved in the opposite direction, expanding 29%, driven by a strong 7-point gain in retail. So while the category remains communication heavy, we're seeing a clear shift towards retail touchpoints, where demand and client engagement are strongest. So while global momentum slowed, China continues to act as an anchor of growth, signaling how the market is localizing around physical experiences and direct connection with consumers. Now, regarding the top 5 categories with most activations, globally, we see communication that is continuing to lead, accounting for nearly half of all activations, followed by products at 29% and retail at 22%. In product, the focus remains firmly on new pieces and limited editions, which together represent the majority of activity, confirming that novelty and exclusivity remain key drivers of engagement. Within communication, there's a clear emphasis on events, product campaigns, and exhibitions, formats that bring storytelling to life in immersive, collector-driven ways, while traditional campaigns have softened slightly. On the retail side, activity stays robust, with around 2/3 of initiatives linked to new store openings, brands are still investing in visibility and physical experience, and we're seeing small but growing experiments with cafes and hotel collaborations, extending luxury into lifestyle touchpoints. In China, the pattern shifts. Communication dominates, led by product campaigns and events, while retail maintains strong momentum around new store openings. Product collaborations also stand out, reflecting the market's appetite for creativity and localized storytelling. And here, again, we can see the key players that are driving this sector during the first half of 2025. So globally, the picture is quite balanced. We have Bulgari and Cartier that continue to lead in communication and retail visibility. It's also supported by Tiffany and Van Cleef. Maisons that maintain strong cultural and lifestyle engagements, even as some normalized activity after last year's exceptional cycle. On the product side, there's a more diverse mix. We have Montblanc, Pandora, and Chopard that remain active, although several brands have moderated launch frequency, focusing on fewer, more collectible introductions that reinforce exclusivity and craftsmanship. In China, the dynamic shifts. We have Chow Tai Fook dominating across product, communication, and retail. And that illustrates how local jewelry houses continue to anchor domestic engagement. Montblanc, Tiffany, and Breitling also show strong activity, reflecting the crossover between fine jewelry and lifestyle watch positioning. So overall, what we see here is that the category is transitioning towards a steady, experience-driven rhythm, balancing heritage storytelling with a growing emphasis on retail excellence, but also local resonance.
Just one thing, Rita, on watch and jewelry, which is quite important. Of course, we could discuss the methodology for hours because naturally, when you're Pandora, you launch much more products than luxury brands, naturally. And likewise, in China, Chow Tai Fook would do much more activities and launches. So this could be refined. But however, what's really very interesting, which you just stressed, is this importance of local players, be it Chow Tai Fook on the more mass or La Pouholte in a little bit more premium. And this is something we can't avoid and not link to methodology. Thank you, Rita.
Sure, thank you so much, Jonathan. Okay, so now moving to a trend, and one of the most inspiring evolutions that we've been tracking is what we call the high jewelrization. So luxury houses are elevating their offer by infusing high jewelry craftsmanship into adjacent product categories, from Dior's gem-studded lipstick pendants to Buccellati's jewel-encrusted handbags. The new Gucci Pomellato Monili collection also perfectly embodies this hybridization, merging Italian heritage, artisanal technique, and modern refinement into a single expression of quiet luxury. So these ultra-exclusive launches actually serve a dual purpose. They stabilize revenues through high-margin categories, while also engaging the ultra-affluent clientele, that is a group representing less than 0.1% of consumers, yet generating over 20% of global luxury sales. So ultimately, this trend highlights how creativity and craftsmanship remain the industry's most resilient levers of growth, blending artistry, heritage, and business strategy in equal measure. Now, on this slide, we're highlighting the US pre-owned watch market that is booming again this year. In fact, after the new tariffs on Swiss imports and a strong Swiss franc pushed retail prices up around 7% in the second quarter, and consumers quickly turned to the secondary markets. Platforms like Bob's Watches and Subdial saw sharp spikes in trading volumes, signaling renewed momentum after several quieter years. At the same time, brands are responding strategically. We have Rolex expanding its certified pre-owned program, now covering all watches over 2 years old. And in Q2 alone, those certified sales generated an estimated $120 million in revenue. So more broadly, integrating the secondary market has become essential, a way for brands to protect pricing power, safeguard brand equity, and also build long-term value resilience, especially right now in the US. Finally, last but not least, let's turn to sports and lifestyle, where performance meets aspiration. So in the sports and lifestyle segment, we're seeing one of the sharpest contractions in activity, down 31% globally and 26% in China. But behind that slowdown lies a very significant strategic shift. Globally, both product and communication activations declined, while retail surged by 15 points, signaling a clear move toward experiential and physical engagement. And in China, that pivot is even more dramatic, retail activation jumping 41 points, completely transforming the landscape from mass campaigns to hyper-local experiences. We have brands like Adidas, Fila, and Li-Ning that are leading the way, moving away from global hero campaigns and investing instead in community-driven formats, such as in-store customization labs, city-based running clubs, and neighborhood pop-ups that blend sport, culture, and design. So ultimately, this category is no longer just about performance, it's really about connection. We have retail spaces that are evolving into community hubs where sport, creativity, and identity meet. And now, starting with the global view of the top 5 categories, we see that the activations continue to be driven by collaborations and new products, confirming that partnerships or steady renewal remain central to engagement, even if launch volumes eased slightly. In communication, campaigns and events still dominate, showing that storytelling and experiential formats are where brands keep investing visibility. And in retail, the shift is unmistakable. We have new stores and pop-ups together leading activity, pointing to a focus on refreshing physical presence and testing more flexible formats. Now looking at China, the mix tilts more strongly toward retail, where new store openings make up nearly 3/4 of activations. In product, we see a balance between new collections, limited editions, and collaborations, underlining the appetite for creativity and exclusivity. So overall, the story is consistent. We have the sports and lifestyle brands that are balancing global consistency with local creativity and pairing constant novelty with immersive and experience-led engagement. And here we can see the most active brands by activation type. So at the global level, we have Adidas that is clearly leading across product communication and retail, reaffirming its position as the category's reference for performance means lifestyle. While overall activations volume dipped slightly in communication, Adidas continues to invest in strong experience-driven retail with plus 13% of total activations coming from store openings and experiential formats. Uniqlo follows as a consistent second mover, particularly in product and retail, leveraging its global scale and accessible design strategy. In China, however, we see a very different dynamic. Li-Ning dominates both communication and product activations. Also here again, showing that how homegrown brands are shaping a new narrative, one that fuses sports, fashion, and cultural pride. Fila also maintains a solid presence, reflecting its strong hybrid appeal between international heritage and local relevance. So together, these two brands, Adidas and Li-Ning, really capture the dual forces reshaping the sports and lifestyle market. Global aspiration on one side and local cultural energy on the other. And now let's take a closer look at one of the semester's most interesting and cultural events, also very much so here in France, so the Fête de la Musique, and how it actually became a stage for hyper-local activations across fashion, sportswear, and lifestyle brands. So every June 21st, it transforms into an open-air concert, really everywhere. But this year, the brands leveraged the event even more strategically than ever, blending fashion with music and immersive experiences, really to strengthen the cultural presence and connect with a younger audience. Gen Z really taking a very strong and strategic role for brands. So one standout example was the APC and Mid Capsule launch that was hosted right inside the brand's Paris boutique with a DJ set by Mid, so singer and DJ very known from the Ed Banger label. And the brand turned its retail space into a live concert venue, reimagining merchandising as a cultural performance. And the insight here is key. So brands today are no longer content to simply sponsor culture. They're embedding in themselves within it. So it's no longer about being a sponsor of sports event only. It's about really becoming part of it. So these activations are driving not only visibility and engagement, but also emotional resonance, especially with Gen Z, 28% of whom say they prioritize memorable experiences over products. So to wrap up, the first half of 2025 reveals an industry in transition globally within all sectors that is more selective, more localized, but also more creative than ever. Luxury brands are balancing heritage with innovation, exclusivity with cultural relevance. They're finding strength not in volume, but in meaning through experiences, exhibitions, collaborations, and purpose-driven storytelling. And with that, it concludes our deep dive on H1 2025, at least on the Brandwatch side. We hope that this part of the session provided a clear sense of where the market is heading and how brands can position themselves for what's next. I now hand it over to Agatha, who will continue with the second part that is actually LY trends. Thank you all for your attention.
Thank you, Rita, and hello, everyone. My name is Agata Kuprianyuk, Senior Fashion Analyst at Heritech. And in this next part, I have the pleasure of sharing insights from LY Trends powered by Heritech. We are an AI-powered trend forecasting platform that analyzes over 1 billion consumer images, detecting more than 2,000 fashion attributes. With 8 years of historical data and forecast extending up to 2 years ahead, we help our clients make informed design and merchandising decisions. And with our fashion team, we look into broader consumer context to deliver the why behind the data. For this report, we selected these fashion aesthetics that stood out in first half of the year. First, we have golf course chic with key trend of short sleeve polo shirts growing by 19% in Europe. Then an equestrian inspired aesthetic driven by 9% increase in the popularity of equestrian boots in China. And finally, a menswear aesthetic that we will now dive deeper into. So over the past few years, different sports have inspired fashion, from tennis core to football-inspired blog core or the racer aesthetic driven by Formula One hype. And today, we focus on an aesthetic that we first highlighted in our Spring-Summer 2026 Menswear Fashion Week report, and the one that's been gaining real momentum recently. So the sport is cricket. Set to debut at the LA 28 Olympics, the sport has 2.5 billion fans globally, making it the world's second most followed sport. Yet, until recently, it's been mainly under the radar. So what we call Summer at Lord's celebrates cricket's fashion codes through a lens of vintage athletic style. We are seeing contrasting color block and V-neck jumpers showing strong double-digit growth across Europe and China, while pieces like polo shirts and ripped knits are also gaining momentum. And while cricket is only beginning to influence fashion, the next story shifts gears to a brand that's already turning sports culture into real commercial momentum. So Puma is having a strong year. Over the last quarter, it recorded a meaningful increase in market share among women, up 0.3 percentage points, the largest gain in the segment and on par with Adidas. At the same time, momentum for previous leaders like On and Onitsuka Tiger has started to slow. And while Puma still trails the industry giants, Nike, Adidas, and New Balance, it's steadily building ground. And what's interesting is where this growth is coming from. So while the brand's share among men has slightly declined, Puma's Speedcat model has exploded in popularity among fashion-forward women, up more than threefold in recent months. But this success isn't just about product, it's about presence. Puma's been strategic in how it shows up, from cultural moments like Fête de la Musique to creative partnerships with Coperni. It's meeting consumers where they are, on the ground, online, and in the culture. So the question now is whether Puma can build on this momentum and replicate a success like the one of Adidas Samba. With the right balance of partnerships, product strategy, and smart distribution and volume planning, it just might. So the foundation is there, and the brand feels more in tune with sportswear culture than it's been in years.
Perfect. Thank you very much, Agatha, and thank you everyone really for attending our webinar today. Thank you all for joining, and for your information, everyone who actually joined will receive the full version of this report by email later today. And if you would like to learn more about Luxury Insights, you can either scan the QR code that you can see on the screen right here, and even reply by email to connect with our experts and know more. Now I let Jonathan speak a few words.
Hopefully not too many. Thank you so much for being here this morning. And naturally, you can reach out to Rita anytime, either to get the report, which is here for you, or to ask any question on the methodology or what we can provide you. Have a great day and happy to share you more soon. Take care. And thank you so much, Rita and Agatha, for spending so much time in working on it and sharing it with the team. Thanks a lot, everyone. Have a great day. Bye-bye.